let's start off with those numbers that came through from Equity Bank. Profit before tax, a gain of 43%, sitting at 1.7 billion shillings. Your view on those numbers?
Thank you very much, Eleni. It's a pleasure to be here. Basically, what you've noted about Equity Bank is, in one word, remarkable. We are seeing equity going back to double-digit growth, which is very commendable, especially after what you observed about 2009, which was a fairly slow year. With the 2010 is looking very productive and also promising, and Equity Bank has not let us down.
Operating expenses up 34%. What do you make of the recent cost management? Do you think that it's working? Do you think that we'll be seeing expenses and cost structures looking better going forward from here?
Thank you very much, Eleni. That's a good observation. Basically, Equity Bank last year expanded significantly into the region, as well as we saw them doing a bit also locally, and we saw them even venturing into investment banking. But recently, what we've been seeing, especially in terms of cost management, we saw a bit of restructuring at the top, and also they closed the investment banking division. And as of now, they're trying to consolidate their business, and because of that, definitely is going to post some good margins. And also looking at it in terms of the business environment, looking at it in terms of how their loan book has grown, as you observed, and also in terms of how they're going to manage their costs. Definitely that's going to be a very good plus going forward, and definitely if at all they can be consistent, especially with the performance for the first quarter, by quarter four the performance is going to be excellent.
Well, non-performing loans sitting at 25% or 25% higher at this stage of the game. So, you know, when are we going to be seeing an improvement on this figure, Samuel? Because some are really concerned. We also know that the likes of Barclays and we also know the likes of Cooperative Bank have come to the party and slashed their lending rates. What do you think is going to happen on this front? And also just given that non-performing loans are still a very big issue for the likes of Equity.
Thank you very much. That's a good observation, Eleni. And one of the things that Equity Bank has done, especially over the recent past, is their customer base has been very significant, especially going into the retail clientele. And because of that, their loan book has been very big. And because of that, they have been really exposed, especially in terms of their default risk because of their loan book. And looking at their NPL and especially looking at the operating environment that they are in, the competition is definitely going to be very stiff. But because of especially their asset base, it has grown very well. We are looking at them sitting on a very good asset position. It's going to really help them to be able to lend significantly. And they have been a bit cautious, especially in terms of their lending. And because of that, they might be able to still be able to sustain, especially in terms of what you noted, their accounts.
Well, a PE of 15.5, higher than its peers, though, Samuel. So would you be buying the stock at these levels? Are you feeling confident that Equity Bank is going to go from strength to strength from here onwards?
Thank you very much, Eleni. Thank you. As you noted there about their PE, their PE as of now is trailing is 15.5, which is fairly higher than its peers. And looking at the sentiments in the market, we are seeing still very strong demand for the stock. And most of the investors are more of looking at it in terms of how they are looking at it in terms of forward-looking. And because of that, we are seeing a lot of investors putting in a lot of confidence in terms of how the Equity Bank is going to perform. My fear would be, especially as you noted there, the PE being as high as it is, it may not be very sustained if at all they're not going to continue posting double-digit or maybe even such significant growth, especially in the looking forward. But in terms of how speculative the stock can be, definitely that's one share that somebody can buy and be a bit cautious not to lose cash.
Right. Samuel, I'd like to talk about KCB as well, but it seems that we're running out of time. So I'm going to have to just ask you about what you think of the overall markets. We know that many investors are feeling confident that we're in a bull market right now, and a lot of confidence that we'll be seeing the earnings kind of set that in stone as well. Are you feeling confident that we'll be seeing sustainable gains from here onwards?
Thank you very much, Eleni. Looking at the market going forward, basically you're going to see a lot of sustainable gains, especially in the equity market. One of the things that I would like to highlight is the fact that interest rates have been going down, especially central bank rates, and because of that, I'm expecting a bit of capital flight in terms of investors shifting back to the equity market to be able to cut in on marginal gains. And because of that, you're going to continue seeing sustainable growth, and also looking at it in terms of the corporate actions that have been coming through, definitely with 4.5 GDP growth and such, you're going to see a lot of growth in the equity market, and so people should be taking positions as at now. Looking at the political front, well, it's been a bit shaky, but hopefully you're going to be able to still pull through that and sustain the growth of the equity market.
Of course, shuffling of ministers, I know that you're alluding to, but Sam